the price action that we've seen since last week. Where's that Russell 2000 chart? It should be first in the deck. The price action that we've seen since last week is just small caps are screaming at us. You got to be listening. Like Russell 2000, I'm picking up what you're putting down. Look at this one. We're going to remake this because it's very ugly. I just did this real quick in TradingView. But this is measuring the 5-day rate of change. So since, I guess, Thursday of last week now, Wednesday, right? Because we had Powell in front of Congress. That really started things.
Yeah.
Cold CPI. The cold CPI. We had breath thrusts, by some measures. They call them the 70, 3 days of 70% advancing stocks. That triggered Friday before all the craziness of this week, right? And now we just keep thrusting. We got the whaley yesterday. But this isn't about breadth. This chart is showing momentum. This is a momentum thrust. This is initiation. This is the kind of stuff that we see at starting points, at the beginning of trends, not the end. So there's a lot of, really interesting and intelligent takes, I think, on the internet and in the news right now about how strange this is to get these thrusts so late. If you look at a chart of the S&P 500, it is strange to get a thrust at all-time highs when, this bull market is not new. We think it began in July of 2022. It's 2 years old. Very strange to get a thrust on a chart that looks the way the S&P 500 does right now.
Well, it's new for small caps.
What's not strange is to get a thrust on a chart structure that looks like this, that looks like small caps. Right? I'm talking about this kind of stuff happens at the beginning of trends. What have we been saying about the pattern in the Russell 2000, Spencer?
Sorry, I was reading Billy Cunningham's comment. I was distracted. What'd you say?
So what we've been saying about the pattern in the Russell 2000 is that the trend reversal has not even completed yet. We've been saying that all year and last year.
Look, we've been waiting.
Range, right? It just completed. This is now a valid trend reversal, and it did it in a very decisive, authoritative way, right? Blow out momentum, blow out internals, and then also just blowing out the relative trend too, right? If you look at small caps relative to NASDAQ 100, S&P, anything, absolutely crushing. And you're getting thrusts and momentum there that really stands out when you zoom way out on the chart. So I just want to, yeah.
Couldn't we just say this is very simply a reaction to Jerome Powell's sentiment last week and the realization that, oh yeah, we actually are going to get a rate cut in probably September, but more importantly, rates are going to head in the downward direction, and that's the period we're now entering.
Yeah,
lower rates, good for small caps. High rates, not so much.
Yeah, it's a double whammy, right? It's definitely bond market, right? Because we've talked about this is the interest rate sensitive rally, right? Regional banks, real estate, ARC stocks, biotechs, whatever. The rate stuff really works. Home builders, look at home builders, right?
So that's all this is. This is just a reaction to Jerome Powell.
No, it's a double whammy, right? It's political too. Whether that's right or wrong, it's election cycle stuff too. So what we saw at this first green circle, you know when this was? So last time we had a 5-day rate of change like today's, besides the pandemic, which was just the most unusual momentum reading we've ever seen off of the lows.
Wait, out of curiosity, what's so special? Did anything happen? That was 2016.
November 2016, the election happened.
Oh.
You're getting the market reacting as if the election happened 3 months early or 4 months early since last week. On top of this bond market catalyst of lower interest rates, and you have the dollar breaking trend, right? So all of these things just at the same time got thrown at the market, I think. It's a combination of a lot of stuff. It doesn't matter.
That is interesting.
Yeah, it doesn't matter the reason though, right?
I don't. That's what JC would say if he was here. I don't necessarily agree. I think reasons matter because they can tell you sometimes when things could change, or more importantly, why they could change. Right. So it's not always sometimes it's a waste of time and energy to prescribe a reason for every move. But in this case, I mean, come on. right? Pretty obvious, I think.
Yeah. And look, all of these things, all of these developments, right? Because we talked about the predicted polls and Trump's odds spiking, and we had the debate debacle, like last week. So you got some action there with them pricing in what looks like a better chance of us knowing who our next president is now. And then you also have the bond market developments. All the Powell stuff last week was huge. He was talking about bank deregulation, right, in front of Congress a ton. So the banks loved that. Then you had rates come down, the home builders and everybody else loved that. So I think it was just, a big combination of things that all hit the market at the same time. And that's why we're getting such a big splash. So if you go to the next chart, this one's called the Whaley breath thrust. Let's just go through right down the line, and we're focusing on the S&P 500, but then we're going to go back to small caps. Whaley breath thrust. Look back periods 5 days. So over the trailing 5 days, advanced decline ratio about 3-1 gives you a Whaley breath thrust. These are super rare, Spencer. This chart goes back to the 1940s. These are very rare readings. We had one coming off of the fall lows last year. I believe it was in December. No, maybe it was November of last year. Now we're getting another one, right? Late cycle breath thrust for sure. At least it feels like when you look at the price chart. Now, if you look, this one has pretty much a perfect track record, and this is really important. So look at the track record here. If you look out a year after this reading, has a 100% success rate, which always freaks me out. Whenever I see 100% success rate, I'm like, it ain't gonna work this time. But it's a good thing. Don't think like me. I'm a skeptic. The last time we hit in June of 2020, that's what I'm talking about, those readings off of those pandemic lows, 30% over the trailing year. Look at the forward returns after these Whaley breath thrusts. We just got one, and we're doubling up. We had one in November of last year also. It can only be a very, very good thing. Now let's look at more stats. This is the 70 thrust that I referenced earlier.
Whoa,
Right,
whoa, whoa, whoa. A lot of numbers here. Hard to read. Just describe this. What's going on?
3 straight days of a 70% advanced decline. 96% win rate looking forward 12-month returns, and an average gain of about 22%. Okay, let's move on to the next one. Hopefully we can see it better. Okay, this is my favorite. This is really our breath thrust that we lean on more than anything. Keep it simple. 20-day new high indicator, right? When it triggers over 55%, to us, that is a thrust. It's only been wrong once. When you look out at the 12-month returns, the average gain is 17%. It's got like a 96% win rate. We had one October of 2022. We had one July of 2022, right? That was the first reading. Very early on, you get these. Very, very early on. Maybe only beat sometimes by percentage of stocks overbought in terms of like the earliest breath thrust indication that you can get. We had another one October 2022. We had another one in December of 2023. Yesterday, we came in, Spencer, at basically 54.87%.
Wait, just real fast. I'm looking for now on this in this table.
Well, maybe stop looking and start listening.
Okay.
Yesterday, the reading came in at 54.87%. This is the stuff that we talk about behind closed doors. Grant's like, it's not 55%. I'm like, you round that up. It's like, I don't know. I'm a technician. We draw our support and resistance lines with crayons or markers or big highlighters, right? We round things up. Our price target's not 91.23. It's low 90s. If you get a reading of 54.9, I think that's 55%. Here's what really matters before we argue over 0.1%. What really matters is that the breath thrusts you trust come in bunches. They're delivered in giant baskets of breath thrusts. And everybody on the internet is talking about how their thrust is triggering. That's how you know it's a thrust. That's happening now. It's been happening since late last week, right? The thrusts are everywhere. So I think that 54.9% should be rounded up to 55%, and we count it. Then again, that begs the question, how could we get a breath thrust right now? Go to the next chart. These are also very rare, the 20-day thrusts, right? So this chart goes back to 2013. There were a lot off of the financial crisis lows. So this is just looking back like the past decade. These tend to happen at the beginning, very early on, right? Sometimes you even get it too early on, like we did in 2022. shown the first yellow circle in 2022, right? You got it in June of 2020, also coming off the pandemic lows. If we put another yellow circle on this chart at the current price, Spencer, that would look a lot different than these past occurrences. Now, wouldn't it?
Yes.
I don't see new all-time highs with a thrust reading in the past.
Yeah, but
But what?
usually they're in uptrends, right? Usually, except for the 22.
No, they're not usually in uptrends. I mean, would you call that an uptrend, the reading in January of 2019? Would you call it an uptrend in June of 2020? Maybe very short term, but well below the COVID highs. Look at the readings we got in 2022 at the bear market lows. We were building out a bottom. We were
Yeah,
basic.
2022 obviously is not, but
I would call maybe the 2021. You have some sort of an uptrend there shaping up right after that V-shaped bottom. But still, I mean, the market just collapsed. People were very bearish back then. Very different than today.
yeah, I guess the 2015 one too, because we were in a sideways range for quite a while.
Yeah.
All right, stand
So
corrected.
listen, I promise you, you can trust me. I know this data set very well. You don't typically get breath thrusts when the market's at new all-time highs. But I think this breath thrust is a lot more about small caps than large caps. Large caps probably continue to participate and trend well. Go to the next chart. This is fantastic. This is so important, this kind of context. Put up the table. Yeah. If this bull market began, this is the standard definition, Spencer, so you should like this, of a bull and a bear market. 20% in one
20%.
direction, after 20% in another direction. That's how we're measuring it off of the lows. We're using the S&P 500. So this one began, say, October 12th, 2022. Oh, the famous CPI day, right? October 12th, 2022. Actually, it was 13th, the CPI day. The average return in a bull market period for the S&P 500 is 150%. Median return is 91%. We're at 60. The average duration of a bull market is over 1,100 days. We're at 440. We're not even halfway there.
That's interesting.
So the
Yeah.
average duration, not even halfway there. The average return, we're like a third of the way there. So maybe to get a breath thrust this late, it's just confirmation. Hey, we're earlier than you think. We got a ways to go, Mr. Market. I don't know, right? I have thoughts. I have opinions. Nobody knows for sure what this breath thrust means. But when the S&P, on average returns 9% a year, and I can show you if you go back to like the first table, Alfonso, with the Whaley, that after these signals, you tend to get an average of 20 or more percent over the trail or over the forward 12 months. Nothing I'm saying right now could be interpreted as anything but bullish.
Now, okay, you've got the data. I don't have the data. You have the data, but you could forgive someone, Steve, for looking at the chart of the Russell over the last week or so and saying, "There's no way this thing can keep going like this," right? You could forgive someone for saying that.
In the short term, I feel the same way.
Yeah.
You know what I mean? Like the Russell 2000 is incredibly overbought. It's very stretched over the short term, but the short term is the short term. Investing and trading is a lot easier when you extend your time frame a little bit. That's why we do that. The longer term and the intermediate term trend, I mean, dips are to be bought in something like small caps. The other thing to point out, is just go back to the first chart, Alfonso. We'll get a clean reversal pattern of the Russell 2000 marked up so we could show it. But this trend is just beginning. So we're getting this like starting line momentum, right? Right as the base is breaking out. You know how we say, like, Spencer, if we get a breakaway gap or big volume on a move out of a pattern, we like it more. We're getting a momentum thrust. We're getting a breath thrust. We're getting, momentum thrust in the relative trends that favor small caps. Like everything is firing as this brand new bearish to bullish primary trend reversal prints. You couldn't ask for more confirmation is my point. So do you want to trust this rounding bottom or trust this trend reversal for small caps? I don't think I've ever seen a better supported pattern resolution than this.
I mean, look, raise your hand in the chat if you're underweight small caps. I'll start.
Yeah. So look, let me just finish up here. Now let's just go to this triple pane chart on 9. This is about small caps. Will large caps stop working? Highly doubt that. Highly doubt that. I think a lot of them will continue to be absolutely great, right? I don't think you want to. I'm not selling my large caps. Might sell some of them, right? But for the most part, we hold on to those. You just want to own more small caps now.
How dare you say so?
Yeah. So if you look down in red here, this is the percentage of S&P 600. That's the small cap S&P index at 20-day highs. This reading is just ripping, right? So it took out the reading off of the October lows from last year, which the large caps have not been able to do. If you look at the black line above, that's the S&P 500. Mid caps is in the middle, right? Small caps also eclipsed the short-term new highs extreme reading that we had off of the pandemic lows. I know I was just talking about this off camera. If I'm here saying things like we haven't seen this since the pandemic lows, or this reading, eclipsed the pandemic lows, the readings that we got in terms of breadth and momentum off of the pandemic lows in the first half of 2020 were absolutely historic. Some of the biggest readings we've ever seen. Small caps just beat that number. So my mind is kind of blown by this. I think everything that we're seeing since last week, it says, blue skies ahead for large caps, more good times for, the stuff that's been working. But this is really about small caps. This is really about small caps. I don't think that you can have enough exposure to small caps right now. Just do 12 and we'll finish it up, Alfonso. It's S&P 600 stocks percentage of overbought readings. I mean, just absolutely monster reading. Actually, yeah, go to 10, actually. This shows it as well. If you look at something like the 200-day moving average here, in 4 days, we went from an environment, just look at the last line here, S&P 600 percentage above the 200-day. In 4 trading days, we went from half of the stocks in the Russell or in the S&P 600 above their 200-day. So you could argue in primary uptrends to now 3/4 in primary uptrends. It happened in 4 days.
Steve, wouldn't the thing to do now just very simply look at the relative trends of whatever you want to compare, small and large, whatever industry group, whatever sector, whatever stock even?
You still can't look at like a small cap versus large cap chart and be like, oh, a primary trend reversal is in. We're talking about 4 days, right? It will take time. But what we are seeing actually in the relative trend is like, that's initiation. That's how new trends begin, right? The bottom is in. So how long it takes, listen, after a run like the past couple of days, allow them to back and fill a little bit, let them cool off, let them digest these gains. You could be patient, right? There's a reason why I'm pointing out the forward 12-month returns when I'm talking about these readings. These breadth thrusts I'm talking about tell you nothing about what the market's going to do the next day or the next week or even the next month. It's telling you what the market's going to do from a primary trend perspective, looking out quarters or years, right? So you could pick your spots, you could be patient to build that exposure to small caps, but that's the playbook now. The playbook has dramatically shifted, in my opinion, from the bigger the better, mega cap growth. I want to be in the AI names. Let's run the leaders, right? The chase that we saw for these leaders since, I don't know, December of last year, it's been incredible. I think that ends, right? Now you want to chase the small caps. It's all about the smalls.
Wow. A lot can change in a week.
When you get initiation readings like this, yeah, this is some rare price action. It's been a lot of fun. We've been doing a lot of breath work, just trying to figure it all out. So we're running some numbers now. Hopefully I can share before the end of the week. Really trying to focus on the differences between the timing between when we get a large cap breath thrust and a small cap breath thrust. Because usually, like at the pandemic lows, we get them both at the same time, right? Like in May, June 2020. This time around, I think we really are going to find that the real thrust is happening now for small caps, and we never got it back in 22 or 23. Even the one off of the October lows, it was good, but this is better. So I think this is the big reading that we really pay attention to this cycle and look back at and circle on all these charts. So that's all I got for breath. My rant is over.
Turns out the real thrust may have been the friends we made along the way.